Hi everyone, in this video we'll be going over A-Level Accounting 2023 May-June Paper 3-2 question number 3. This is a structured paper 3 which consists of 3 questions and each of them will be of 25 marks. The total time limit given for this paper is 1 hour and 30 minutes, which means that ideally you should be spending about 30 minutes in order to solve each question. And in this video as well, we'll be attempting to solve this question under 30 minutes. So without any further delay, let's get started. Alice and Bob had been in partnership for many years, engaging in the trading of wood. They shared profits and losses in the ratio of 3:2. The total contributed capital was 250,000. Each partner contributed capital on the basis of the profit sharing ratio. So first of all, let's figure out the capital for our partners. So for Alice, that is just going to be our total contributed capital of 250,000. And it is based on the profit sharing ratio. For Alice, that will be 3 out of 5 parts. So multiplied by 3 divided by 5. This gives the capital for Alice to have the amount of 150,000. We repeat the same process for Bob. That will be 250,000 and his profit sharing ratio is 2 out of 5 parts, which gives Bob's capital to be 100,000. Now on 1st January 2023, they agreed to sell business to X Limited, also a trader of wood, for 420,000. This amount will be our purchase consideration because that is the total amount that Alice and Bob will be getting from X Limited by selling their partnership business. Now, X Limited took over all the assets except cash at bank and a vehicle. The assets taken over were revalued as follows. So we're given the carrying value. This is the value in our balance sheet or statement of financial position. And revalued amount is the amount that X Limited paid for these assets. Further information is also available. Alice took over the second vehicle, which had a carrying value of 25,000 at the value of 23,800. So this is the value that Alice paid in order to get this vehicle, which is valued at 25,000 in our statement of financial position. Then the trade payables of 44,000 were settled after taking a cash discount of 5%. So let's figure out the discount amount. That's 44,000 multiplied by 5%, which results in 2,200. This is the discount received. So the settlement amount that we actually paid for this trade payables will be 44,000 minus 2,200, which results in the value of 41,800. Then cash at bank at 31st December 2022 amounted to 27,000. So this is the closing balance. And the purchase consideration was settled by 200,000 ordinary shares of $1 each at a value of 1.60 per share. So let's figure out the value of shares. The number of shares is 200,000. And the rate per share is given to be 1.6. This results in the value of share to be 320,000. And then the balance in cash. The ordinary shares were issued to Alice and Bob equally. So ordinary shares for Alice and Bob will be half of these amounts. So that's 320,000 divided by 2, which results in 160,000. So they get shares worth 160,000, both Alice as well as Bob. Then Alice and Bob had a credit balance on their current accounts at 31st December 2022, and the balance on Alice's account was twice that of Bob's. Their current accounts were transferred to their respective capital accounts on 1st January 2023. Let's figure out their current account balances as well, and we can do so with the help of this equation, asset equals to capital plus liabilities. So we're given the value for assets, and all of the value will be as per our statement of financial position or the balance sheet. We can see that our assets value is 290,000, and these are only for the assets that are being taken over by X Limited. And we also have additional assets, such as cash, that's 27,000, as well as the second vehicle, which had the carrying value of 25,000. So we need to add that value. Now remember that the capital account will include the capital balances as well as the current account balances, and we're trying to figure out the current account balances. We were given the total capital to be 250,000. So we can just add this as our capital balance. So that's 250,000 for capital. We're trying to figure out the current account balance. And the liability, the only liability mentioned is trade payables, and it was of 44,000. Now we can easily figure out the total of current account. That is just going to be 290,000 plus 27,000 plus 25,000 minus 250,000 minus 44,000. And this results in the value of 48,000. Now we need to divide it among our partners Alice and Bob. And what we know is that Alice's account was twice that of Bob. So the ratio is just 2:1. Out of 3 parts, 2 parts belongs to Alice and 1 part will belong to Bob. So for Alice, that is just going to be 48,000 times 2 by 3, which results in the amount of 32,000. And for Bob, that's 48,000 multiplied by 1 divided by 3, which results in the value of 16,000. Okay, now we can move towards the first part of this question. We need to state 2 reasons why a business may acquire another business. So the first one is for elimination of competitors, because in this case as well, both the partnership of Alice and Bob as well as X Limited is trader of wood. So they are in the same business, which means that if they acquire another business, then there will be less number of competitors. So that results in elimination of competitors. And the next reason could be synergy, because when 2 businesses merge, the efficient ways of both of business will be combined, which results in even more efficient and effective business. So that is synergy. That's all for the first part of this question. We can now move towards the second one. We now need to prepare the realization account at 1st January 2023. So realization account is just the T account. And the format is pretty simple. We start with the assets value as per our statement of financial position on the debit side. So I'm just going to write that down. So we have assets and we have 2 different assets. Remember that there was a list for assets taken over by X Limited and it had the total value of 290,000, and we also have another asset which is a vehicle which had the value of 25,000. So we need to record these 2 items in our debit side of realization account. So this is taken over by X Limited. This had the value of 290,000. Then there was vehicle, and this was taken over by Alice, which had the book value of 25,000. Now we also need to record on the credit side how these assets were settled. So for the assets that was taken over by X Limited, we need to mention the amount that X Limited paid for these assets. That is basically the amount of purchase consideration. So X Limited, this is purchase consideration. Okay, and the amount was clearly given above. It was 420,000. Now we also need to record how this vehicle of 25,000 was settled. So this just means that we need to record the amount that Alice paid for this vehicle, which was given to be 23,800. Let's write it down. And remember that this is taken over by Alice, which means that this amount will be subtracted from Alice's capital account. So we can just say capital account, and this is for Alice. Now we repeat the same process but for liabilities, and that will be on the opposite side. Since we recorded assets at its value given in the statement of financial position on the debit side, we do the same thing for liabilities but on the credit side. And the only liability that we had was of trade payables. And its value as per the statement of financial position was 44,000. Whereas the amount that was actually paid was 41,800 from the partnership's bank account. So 44,000 should be recorded on the credit side. And the settlement amount of 41,800 should be recorded on the debit side. And this was paid out of bank. Okay, that is the settlement of all of our assets and liabilities, which means that now we need to figure out the total of each side and figure out whether there was a profit on realization or loss on realization. So the total for the debit side will be 290,000 plus 25,000 plus 41,800, which results in 356,800. Whereas the total for the credit side will be 420,000 plus 23,800 plus 44,000, which results in the value of 487,800. So clearly our credit side is higher. So that will be the total for both of our sides. Since the balancing figure will be on the debit side, it actually reflects our profit on realization. And also remember that you need to divide this profit on realization among our two partners, Alice and Bob. Okay, so the total for profit on realization is 487,800 minus 356,800, which results in 131,000. Now we just need to divide it among Alice and Bob based on their profit sharing ratio, which was 3:2. So for Alice, that will be 131,000 times 3 by 5, which results in the amount of 78,600. And for Bob, that will be 131,000 times 2 by 5, which results in the amount of 52,400. Alright, this completes the realization account as well as the second part of this question. We can move towards the third one. Now, we need to prepare the partner's capital account at 1st January 2023 to close the partnership books of accounts. Okay, always remember that the opening balance for capital account will be on our credit side. So we can start there. We've already figured out the capital balances for both Alice and Bob. That's 150,000 and 100,000. Let's write it down. That's 150,000 and 100,000. Now we have also calculated their current account balances, and whenever the business is dissolving, in this case it is being acquired by X Limited, so our partnership is closing. In such cases, we need to adjust for our current account balances to the capital account as well. And in this case, we were clearly told that they both have a credit balance, and credit balance refers to the amount that they need to receive from the partnership, which means that this amount will be adjusted towards the credit side of the capital account as well. So that is just going to be 32,000 and 16,000 on the credit side. And we can write it under the heading of current account. So that's 32,000 and 16,000. Alright, then we have also calculated the amount that X Limited will pay for acquiring this business. And we are told that both Alice and Bob will receive 160,000 as ordinary shares of X Limited. And these are the receipts for their partnership business, right? So these settlement amounts should always be recorded on the debit side of the capital account. Let's write it down. So that will be X Limited. And these are the ordinary shares. Both Bob and Alice will get the amount of 160,000. We also calculated the profit on realization, and for Alice there was 78,600, for Bob it was 52,400. So these are the profit that they will get from partnership, right? So this will definitely increase their current account balances, which means that we need to record this amount on the credit side, and we can write it under the heading of profit on realization. So that's 78,600 for Alice and 52,400 for Bob. Also remember that Alice took over Wago, and for that she needs to pay to the partnership business, and that will result in the reduction of her capital account, so it should be recorded in the debit side. And the amount that she paid for the vehicle was 23,800. Let's write it down. We can just write down our balancing figure right here as bank. Let's figure out the total for our credit side, because clearly that's the heavier side for both Alice as well as Bob. The total of Alice is 150,000 plus 32,000 plus 78,600, which results in 260,600. And for Bob, that is just going to be 100,000 plus 16,000 plus 52,400, which results in 168,400. Now that's the total for our debit side as well. So the balancing figure for Alice is just going to be 260,600 minus 160,000 minus 23,800, which results in 76,800. And for Bob, that is just going to be 168,400 minus 160,000, which results in 8,400. This concludes our capital account as well as the third part of this question. Let's move towards the fourth one. Also remember that you are given the working section right here, so instead of scribbling over the insert like I did, you guys should be showing all of your workings in this box so that you get your markings correctly. Now, we need to prepare journal entries in the books of X Limited to record the acquisition of the partnership, and the narratives are not required. So the journal entry is pretty simple, because remember that debit side, we record what comes in. And on the credit side, we record what goes out. So while acquiring the partnership business, X Limited will be getting all of their assets. So that's what comes in the business. So we need to record all of the assets taken over on the debit side of our journal entry. Let's have a look above. And we should be writing down the revalued amount, not the carrying value, because these are the amount paid by X Limited. Now for premises, that's 186,000, equipment 32,000, vehicle 18,000, inventory 45,000, trade receivables 71,000. And the excess amount for this and the purchase consideration is just going to be the goodwill. Let's figure out the goodwill as well. That is just purchase consideration of 420,000 minus the actual amount that is being paid for the assets, which is 352,000. This results in goodwill to be 68,000. So let's record these items on our debit side of the journal entry. So we have premises of 186,000. We have equipment of 32,000. We have vehicle of 18,000. We have inventory of 45,000. We were also given trade receivables, and it was of 71,000. And then we also figured out the value for goodwill, and that was 68,000. Now on the credit side, we need to record what goes out. Sorry, that's out. So what goes out of the business is the purchase consideration that we settled through our ordinary share capital as well as bank or cash. So ordinary share will go towards the credit side. But remember that the value that we figured out before also included the premium, because the normal rate was 1 and they're also giving a premium of 0.60. So let's figure out the ordinary shares. That is just going to be 200,000 into the nominal rate of 1, which results in 200,000. And for share premium, that will be the number of shares 200,000 multiplied by the premium rate, which is 0.60, which results in 120,000. Let's write it down. So the ordinary share will be 200,000. You can write it under the heading of ordinary share capital. Then we also had share premium. That was of 120,000. And then we also had the bank settlement. And the excess will go towards our bank. We know that the total of the purchase consideration or the total of the debit side is just 420,000. So the total for credit side should also be 420,000. So in order to figure out bank, we just need to subtract these two from our total. So that's minus 200,000 minus 120,000, which results in 100,000. So that's the amount that X Limited will pay in cash. And this concludes the journal as well. Let's move towards the fifth part. We're given additional information. With the cash she has received, Alice is considering setting up a new business trading in wood on her own. Now we need to advise Alice whether or not she should set up this new business. We should justify our answer. And it's a 5 marks, which means that we need to have at least 4 considerations. So the very first thing is that she has experience and knowledge in the trade because she had a partnership business trading in wood previously. Let's write it down. She has experience and knowledge in the trade. Nextly, she is considering setting up a business in the trading world on her own. So this just means that she can take all the profit from her own businesses. So she can take all the profit from her business. But she will also be a competition for X Limited. So she needs to consider that as well. She will be in competition. This is because they are both involved in trading of wood. And since she will now be operating as a sole trader, she will have unlimited liability. Now, based on these factors, we need to advise Alice whether or not she should set up this new business. So personally, I would suggest that Alice should set up this new business because she already has knowledge and experience, and she also has the time to run her own business now because she has already retired from the partnership. Let's write it down. Alice should set up this new business as she now has time to run her own business. Alright, that's all for the fifth part of this question as well as the entire question. If you found this video useful, make sure you like the video and leave a comment below, and make sure you subscribe to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.